Hello everyone, we are starting. So thank you for joining us today. You're with myself and Andrew Gething of Morgan Ash. As many of you will know, this is our first webinar in a new series that we are beginning to run for the Protect Association. So good morning or good afternoon, depending on where you are. I hope you enjoyed the lift music you're just listening to, and welcome to today's webinar. So we're going to be talking about customer vulnerability in UK insurance monitoring and treatment. I can see people continuing to trickle in, so don't worry, this introduction won't last too long. We'll just make sure we've got a good amount of people in before we get going with Andrew. But delighted to have so many senior professionals from brilliant organisations joining today. Certainly speaks volumes around the importance of the subject, and we're lucky to have a genuine expert with us in Andrew Gething. A few of you will have met him a couple of weeks ago at the first Protect get together, and hopefully have some valuable conversations. So you can continue to get to know him and Morgan Ash from here, but a really, really important subject that we're covering today. Just to introduce myself quickly, I'm James Edmonds. I work across financial services in various customer strategy and compliance focused roles, particularly around consumer duty, vulnerability, and customer experience measurement. I've also recently taken on management of the Protect Association, which is powered by Lexton, a brilliant customer experience consultancy dedicated to improving customer outcomes in financial services and other sectors. The Protect Association itself has been around for about 25 years as a trade body, and while it's been a little bit quieter over the last few years, we're looking to grow significantly in size now and influence. So it's great to have you all here at the start of this new exciting phase for us. So thrilled to introduce my co-host today, Andrew Gething. Andrew is the Managing Director of Morgan Ash and one of the leading experts in customer vulnerability assessment and monitoring. He developed the Mars platform, which provides an objective, consistent and data-driven approach to assessing and supporting vulnerable customers. With over 20 years of experience, Andrew's worked extensively within financial services and across other sectors to help firms navigate regulatory requirements, improve customer outcomes and implement better vulnerable customer strategies. So Before we dive in, a quick bit around the Protect Association webinar series. So this is actually the first of a new monthly series where we're going to be bringing together industry experts to discuss some of the biggest challenges facing the insurance and financial services industry, covering topics like consumer duty, vulnerability, customer experience, claims and underwriting, fraud detection, all of those very valuable subjects. Now, you might hear a bit of nervousness in my voice. Of course, this being our first webinar, we were a little bit worried that the tech gods might not be on our side today, but it appears everything is running smoothly. Whether that continues or not, we will see, but I feel like we might have made a fairly good start. So a little bit of housekeeping. The session will run for 1 hour, including a presentation, a discussion and a Q&A. So make sure you are beginning to think about what questions you might want to ask Andrew and maybe myself if you wanted to as we get towards the end. Of course, this is about vulnerability, so we might touch on sensitive topics related to vulnerable circumstances. So if at any point anything feels overwhelming, please feel free to step away from your computer or mute your session and come back when you might want to. So we're aiming for about 25 minutes of Q&A, so please drop your questions into the chat throughout or hold them until the end and we can ask them at that point. So a little bit of context about today's session. As we all know, financial services has a responsibility to identify, monitor and support vulnerable customers. With regulatory expectations tightening, firms are looking for practical ways to improve outcomes. How can we ensure fair treatment and measure vulnerability effectively? For me, a deeply personal topic. I've been a vulnerable customer myself, following the unfortunate death of my sister and my wife's cardiac arrest a few years ago. During those times with financial service firms, I experienced both terrible and brilliant treatment from those firms when it came to certain circumstances that myself and my family found ourselves in. The first-hand experience has genuinely shaped my passion for ensuring that our industry does better for customers facing challenging life events, having been there. So with that said, I'll hand over to Andrew now to take us through today's topic. And again, will the tech gremlins appear? Maybe, maybe not. Andrew, are you able to try to present?
Let's give it a go. So thank you very much for that introduction. Here we go. Let's see if we... Excellent. Can you see that?
Yeah, fine.
Excellent. Brilliant. Well, thank you very much, James, for the introduction, and hopefully I can live up to it. So what I want to do is talk in depth really about vulnerability and try and bridge the gap between the FCA's principles and what we need to do in practice. We know it's pretty high on the FCA agenda. We know it's only going to get higher when they talk about it on the 11th of March. The review is published on the 11th of March. And we know a lot of firms are struggling with vulnerability management itself. So just to define the problem to start with, so what we put on there is, what are the problems? So the first one is the consumer duty, comply with the consumer duty, which I think everyone agree with. We've then said enhance customer engagement and arguably, certainly we don't want to lead to a reduction in the customer engagement and indeed in customer engagement and reduction in revenues, which is, I know, a big fear from a lot of people, which I have to say is unfounded, but we'll come on to that. We want to improve outcomes, which clearly is the FCA's aim. And we also want to improve loyalty or customer engagement if we can, because indeed that's the whole point of what we do. So the sort of business thing benefit as well as just consumer duty itself. So let's just start by then saying what is the FCA's requirement. And I've condensed an awful lot of documentation down into 5 items, which seem to be, I've been talking about these now for probably over about a year and seem to be standing the test of time. So the first item there is to understand the consumer vulnerability and to act at least to reduce any harm. So, and I think most people understand that as kind of the principle of vulnerability. The second then item is to monitor consumers over the lifetime of the product. And for product, we also mean service, and general insurance, we're talking about multiple years. And even if it's an annual GI policy, it's likely that then that person will renew with the same company. And so we're talking about monitoring over multiple years. We then, on the third point, we need to report on the outcomes of vulnerable cohorts compared to resilient. So what we mean by that is we need to be able to show that those with, say, mental health or the bereaved are getting as good outcomes as the resilient, or if their outcomes are worse, then we need to then think about what we could do to prevent that or to improve their outcomes. And indeed, I don't think we're ever going to get that will never be perfect, particularly with difficult, some difficult areas like bereavement and mental health and so forth. But that's what the FCA is asking us to do. So for and then the point 4 there is similar in our fair value assessments, the FCA is asking us to look at that from a vulnerability point of view. So again, from a vulnerability cohort, say, are those with mental health or bereavement issues, are they getting as good outcomes as the resilient? And then finally, we need to maintain evidence of doing all this. So we need to have data to show that all of these things we're understanding, and all of these. So I was just reading the item on the bottom, the line on the bottom which came up in front of me. We need, so for our own internal purposes, so we can report back to the board, and also from the FCA if they come along and say, okay, well, show me the data, which evidence is that. The FCA doesn't want to see any data itself, which I know is a confusion for some people. This was reiterated in December when the FCA came out with its report on the Consumer Duty Board report review, and that came out with 5 items. 2 of them we can't help you with today, which is they asked the board to challenge the management report more, and they asked for action plans. But the other 3 are reinforcing exactly these points. So they said the companies had poor data, they weren't undertaking vulnerability management, and they had a poor view of outcomes across up and down the value chain. And we'll touch on the outcomes across the value chain a bit later on. I think it's also important just to note that vulnerability is not just an FCA thing. It's actually a government thing, and it's actually being applied in other industries, notably the utility industry by Ofgem and Ofwat. So, and they have been doing that a bit longer than we have. I'd argue not as well, but they have, that's another debate. But essentially, the whole of anyone who is using a utility, that's gas, water, electric, is being assessed for vulnerability in some shape or form. So that's the problem, and in a practical thing, then that's a bit difficult. So if we jump on to then, so how do we identify? The first problem I think is, a lot of people say, blimey, well, how do I identify the vulnerable customers? Well, we know around 50% of people are vulnerable, and we know that from the FCA's Financial Life Survey. We know it from our own work, and we know it indeed from the utility industry. The pie chart in the middle there shows that roughly 50% are resilient, and then on the right hand side you can see it's broken down into various categories, which actually are not coming up very well on my screen. But basically what that's showing is the severity of vulnerabilities is variable. So some are extremely vulnerable, and some are mildly vulnerable. And I think it's important to understand that, because if you don't, and you just say, oh, I've got 50% of my clients are vulnerable, then you've got a big challenge on what to do with all those people. So understand the granularity of vulnerability is for us, we think, a practical, important thing to do. How people are collecting it. So the common method, and I'm being very generalistic here, so apologize from that point of view. Generally, what people have been doing so far is what I refer to as reactive methods. So they're either waiting for the consumer to tell us, and quite frankly, only very few do. They're waiting for our staff to identify them, typically on phone calls when people phone in. And again, that is a relatively small proportion. Some larger company using voice recognition on those phone calls, which is great, and I believe that's very successful. But it's only picking up those people who are phoning in, and then some are only looking at claims, for example, when certainly in insurance, most people who are claiming will be vulnerable, so they're only picking people up. The net result of that is that most firms are only identifying single-figure numbers of vulnerable people, and that is a problem. The FCA came out middle of last year and said, look, if you don't know who your vulnerable people are, how on earth are you managing them? And we know roughly 50%, and let's not, it's not an accurate figure from that by any means, but they changed their guidance middle of last year to say that firms need to actively engage. So I use the word proactive. We need to proactively try and understand who are the vulnerable, the attributes and the characteristics of our consumers. I think a really healthy philosophy is to say we're going to assume all our customers are vulnerable until we have data that shows otherwise. Now, that may sound challenging, but if you think what most people are starting with by default is saying we're assuming all our customers are resilient unless they tell us, or unless we find out when we phone them. And quite frankly, adopting a philosophy assuming that everyone is vulnerable until you have data to prove they're resilient is, I think, a really healthy approach to this. So where do you get the data to do that? So really simplistically, you can, one idea is you go and purchase data and there'll be a database out there. Well, quite frankly, there isn't. There is certainly lots of financial data, and there are lots of people going around saying, oh, we've got this great financial data. That's all brilliant. You can do that. You can use existing data. And indeed, in general insurance, actually, we don't generally, as far as I can see, we don't have an awful lot of data. And we're talking about financial data, health data, and lifestyle data predominantly, and then customer understanding and as well. The health and life, the health and lifestyle certainly is collected by the protection industry, who do that for medical underwriting, and for background, Morgan Ash does medical underwriting for the protection industry. So there is lots of data there. The challenge I have is, can you access that? Can you access that data? And a lot of approaches is saying, well, the intermediary, the broker is the one who is talking to the customer, so they should be doing the vulnerability assessment. But they're typically, putting the health information into a pricing portal, that's retained by the manufacturer, the insurer, and or within a third-party pricing underwriting system. So is that data available to the right people? And indeed, brokers at the moment are taking information, they're finding out health information, they're putting it into a pricing system, they're not retaining it, and then arguably they've been told by the consumer, but then they don't have that on their file as a vulnerable issue. So to a certain extent, being told and not recording is even worse than not asking in the first place. So when we looked at this a long time ago, many years ago, in fact, we came to the conclusion the only way is to, not the only way, but the simplest way is to go direct to the consumer. And indeed, that's what we do. We essentially do surveys, relatively simplistically, questionnaires, vulnerability assessments, whatever you want to call them. We go direct to the consumer, we ask them questions, and we find that out. And we can do that either by emailing to those people, or we can do it by speaking to them directly. So all those other methods, they're not invalid, but they are not complete. You're not going to get to everyone. And it's why generally there's a huge gulf between what the FCA is requiring, which is to say, look, we know 50% are vulnerable, and what people are delivering, which is 1 or 2%. So when we go out to people, everyone says to me, oh, you can't do that, people won't do it. Well, we can. We've been doing it for 2 years. We've got lots of happy customers. We've never had any complaints on it. We don't ask people if they're vulnerable. What we're doing is we're saying we'd like to understand your personal circumstances so we can better serve you better. So we only use the word vulnerability really within the industry. We don't use it when we go out. So that gets us to, hopefully then we've got a method of doing that. The next challenge people always come up to me is to say, okay, but how do we communicate that internally? And that's then problematic. So the problem is with what's happening at the moment is many firms went off and they trained staff, frontline staff, with things like Texas and IDEA and other mnemonics, which are great. And all that as training is great. And I'm not knocking it. The trouble is most people, when they do that, they're making a subjective assessment. They're making a subjective assessment about, is that person vulnerable to what I'm doing with them at this moment, which may be one product, but then in a year's time, you may be servicing them a different product or a different situation. So that status of calling them vulnerable may or may not apply in the future. So some principles, if you like, about vulnerability is it's not binary. We have a scale. We have a scale of severity. Ours is 1 to 10. I'm not saying that's right, but it's what we use. Just saying someone is vulnerable or not is just not applicable. People are not vulnerable. It's the combination of consumer characteristics and what we're doing with them, i.e. selling them or servicing a financial product, that may lead to a potential harm. And if you break it down to those parts, then that's easier. So we record what we call consumer characteristics, and we could include those severity. We have 100 odd characteristics. It's not every firm uses those because different firms in different sectors need different data. And we break those down into the categories of health, wealth, and life events. So that little graph in the middle there. And then we also have financial capability, which is how much they understand this stuff. We have engagement capability, how much they're willing to engage with an organization, and then support network. So are they on their own, or is there better half an accountant type thing? So all of that we then collect together and bolt into resilience rating. I'm not saying that's the only way, that's just the way we do it. But I think a principle behind this says, without a method to classify the characteristics in an objective manner, then any data you're collecting is going to be is inconsistent. And we need consistent data if we're then going to use that. And I come back to the FCA's requirement is you need to monitor over the lifetime of the product. We also need to look across the value chain. So, and how do different people within an organization know what that level of vulnerability is? So how do we correlate that to outcomes if we've just got a bit of notes in our CRM system, which says a tick box says they're vulnerable, and then some notes saying I spoke to them, just been bereaved, they're not very well, so forth. So we need an objective way to do that. And essentially we've industrialized what is otherwise a very subjective topic. We've made it far more objective. So having done that, the next challenge people say to me is, oh, that's great, but GDPR, we can't store the data. It's sensitive data. And you're absolutely right. That health data is special category data under GDPR. So there's this conflict or apparent conflict between, duty saying you need to hold all this data and GDPR saying only hold the data if you need it. Now, that our way to overcome that is that we basically have a coding system, which is partly you saw on the graph before, partly on the graphic here. Basically, we're saying at a high level, we have what we call this resilience rating. So saying is someone vulnerable or what level of vulnerability is that? We can describe the person's needs, what we need to overcome that vulnerability, and then at a greater level of detail. So the marketing department may only know that person is vulnerable or not, but the person who's dealing with that individual case will know that actually it's a mental health issue and it arrived because of the son's suicide, the year before or whatever that was. So these things, the level of data, you need to hold at different levels of granularity. That's our way of doing it. Again, there may be other ways of doing it, but what I'm trying to say is how to overcome the practical differences between the principles, what the FCA is saying, and practical, how do you solve those problems? So the next question then is about support. So we've got the data, we've got the classification system. What do we do with it? Well, what we want to do is then basically mitigate those harms. And those may be pretty simple. So it may be, advising someone they need a will and a power of attorney. It may be having a meeting with the couple as opposed to just one individual. And we do that. A lot of the industry does that already. So what we find when we do this is the changes are relatively small. But generally what's happened is people aren't recording that they had a meeting with the two people, and that overcame the vulnerability of the fact that one of the couple didn't understand it. So there's then the challenge of there's a whole load of variations about what you should do in those different circumstances. And actually, when you think of the combinations of all those and the different health issues and so forth, there's masses of them. And you may want to link in with particular organizations, charities and self-help groups and so forth. The problem then comes is, how do you train all your staff to do that? And what people have found is, who've gone down this road, is actually that training overhead becomes a bit of a nightmare. So firms have done, they've then said, okay, we've got an intranet, we put that on there, but then you've got to look it up while you're on the phone and so forth. Our approach is essentially, we built a little decision engine, and from that we can say, for this customer, in this circumstances, with this severity of condition, for this product, this is what we recommend. And so we recommend next steps. And those can be anything from refer to a specialist team, to refer to signposting to charities, or send them a letter in bold print, whatever. So if you're doing it manually, actually it's going to cost you an awful lot of money. So you can automate a lot of these processes. At the moment, we're just referring those back to the firms and to humans, because they're just suggestions, because I think we still need to walk before we can run. But you can see over time that some of that can be automated. So, for example, sending in large print and that sort of thing would be automated into other systems. So far more, as in all processes, if you can automate it, it's far more efficient. We then come on to, okay, how do we monitor that and manage that and across? And the answer is, if I go back to Peter Drucker, who gave that quote, if you can't measure it, you can't manage it. So it's important to have this classification system. Once you've got that, then you can produce some really good data. So the graph at the bottom, it's still not coming out very well for me, but is the brown graphs there is the FCA Financial Lives survey of vulnerability by age. So this is where the 50% or 47% figure comes from. And the green is what the individual company comes from. This is diagrammatic from the presentation point of view, but that graph is produced live in real time within the system, and so you can see where you are from that point of view. And the beauty of that is being able to benchmark. So you can start to benchmark how many people you're identifying, of which characteristics, by product, by office, by distribution channel, and that gives you some really good information. So some information actually, which, for example, which we press released yesterday, is there's a view that if the assessment is made by the consumer or by the agent or the advisor, that one of those would give you better information than the other. We've looked at a whole load of data across multiple industries, debt industry, credit, insurance, building societies, looked at all of that. And as far as we can see, the difference of the disclosure of that information is relatively small. So the bias, the question of bias, we think is actually far smaller people than a lot of people were fearing. Slight sidetrack. So each company has their target market. That'll be different. So there's no absolute from that point of view. But once you start collecting the information and having this form, then you're in a much better position, and you can cut it by age and product and so forth. We then come on to, okay, outcome reporting. How do we link that to outcome reporting? And if I go back to, that first slide, what the FCA require, we need to be able to say that this cohort of vulnerable people, they're getting a good or worse outcome than the resilient. And the diagram is there, is trying to show, basically that's showing, there's a whole load of people, if all the yellow dots are people, that they're getting, the vulnerable are getting bad outcomes. So that's the thing. Okay, what is it about that we need to try and sort out? And you need that at a level of detail you can do something about. So there's no point just doing that at saying, oh, we've got vulnerable people. We need to say, well, it's the bereaved. And was it the bereaved, was it the males? Was it the females? Was it a particular age group? So the more you can cut it, the better then you can understand about what you're going to do, because you're not going to be doing the same solution to everyone. So I appreciate that this is all a bit challenging for a lot of people. And a lot of people go, well, we just trained our staff. We thought we were doing well. And, fortunately, the crux of the answer is, yes, you've done great, but actually we need to do more. So how do we get started? So vulnerability, it is a big change. I call it vulnerability management, and we need to think of it that as a different process. Eat the elephant, it's a big thing. Eat the elephant in small bites. We can help. We can help with looking at your consumer duty reports. We can help you in lots of ways, doing customer journey mapping. Start small. All the larger with smaller companies, IFAs and things, they just take the system and away they go, and within days they're working. It's great. Larger firms with lots of systems and processes, then obviously it takes more time. Everyone starts with a trial, typically with one product in one distribution channel, typically internal as opposed to through an intermediated channel, and that works. And learn, understand, go through that learning, overcome some of the really change management challenges of that too. And where do we want to get to? Well, we want to get to the view that we are understanding our customers better. This is an integrated part of what we now do, rather than just thinking about risk management, which is a big topic and we do really well, but that's risk management for us as a firm. We need to think about it as risk management for the consumer. We need to enable change across the culture. It's very difficult for people to change if they don't have the systems and the data to back them up. We also need to look across the value chain, and that's a bit more challenging. Now, I have to say that no one's really, as far as I know, I've come across any firm who's really doing that at the moment. The FCA doesn't require firms to share individual vulnerability data between organizations. What they require is firms to understand the outcomes for vulnerable people across the value chain. So if you just have the broker understands the vulnerability information and the manufacturer, the insurer just has the outcome data, you need to be bringing those together. I hear a lot of people saying, "Oh, well, it's up to the intermediary to do the vulnerability test, and we've done a leaflet which tells them what they've got to do," but no one is actually sharing that data across the value chain, and we need to do that. In my view, we will move to a model where we are sharing individual data across the value chain. And when you think about, particularly, if we're doing that in real time, particularly thinking about, bereavement, thinking about lifestyle changes, employment changes, and those things, that's really helpful, to the day job of all those organizations if they're doing that. So so it'll be far more efficient if that information is shared. There is a whole movement going on, primarily coming out of utilities, which is supposed to tell us once, which is for someone who has an issue, and they go say to their broker and they say, "I've got this." It's so much easier for them if that is then shared with the general insurer, their life insurer, their bank, and everyone else. So it's much easier on them, and there's a load of evidence to saying there's actually an awful lot of people who it's really, really stressful for them each time they go and tell someone. And there's a quote from a disabled guy who says, "Every time I have to tell someone about my ADHD, I lose a week of my life." So clearly that's an extreme case, but having to go through that and tell multiple organizations is clearly not very customer friendly. Having said that, let's walk before we can run. So where do we want to get to? It's not only do we want to meet the regulation, but also we want to be able to get commercial benefit. So the whole aim of Consumer Duty is to improve engagement with our customers. That'll improve trust, and that then should improve trust and loyalty. We should increase the size of the market, and that's the whole driver behind Consumer Duty from the starting point. I've been quoted on a phrase that people seem to have liked is saying, if Amazon did vulnerability, they would call it personalization, which is absolutely, if we really understand our customers, the more we understand them, the better we can do. I was speaking to a company yesterday, they're actually in the credit market. They've actually launched a new product, a loan product. They do loans for £1,000 to £2,000. Based on the extra information they're getting, because they realize that their lending criteria, they can improve it with the extra information they get. So they're getting a fuller picture, essentially on lifestyle information, that they can do that. So which is the first, to be honest, the first company I've seen actually really see that commercial benefit. To be honest, everyone else at the moment is just going down implementing the regs. So the other two, actually, that the remaining slides are just a very skim, because this is people say nice things about us, and then there's lots of links on our website, which I don't want to get into the sort of the marketing piece. But I come back to, the main key messages to me are: we need to move from being proactive to understanding our customers. We need to have data, otherwise, we're not going to be able to meet duty. To have data, you need some classification method. Otherwise, you're just going to have a ton of data you can't use. And quite frankly, if you've got a load of data to do that, you need some tech to store it in. Clearly, that's what we do, but obviously you can build your own as well. James, does that make sense?
Indeed, yes, perfect, Andrew. Thank you. I think just quickly remind us to put questions in the chat on the LinkedIn page as we go through. But yeah, absolutely. So key issues for me in there, having worked on vulnerable customer strategies in a few different organisations, I think the three things I would pull out is hopefully we've changed some mindsets around vulnerability. So to believe that 50% of your customers are in vulnerable circumstances, I think it's really important. When you begin to think about your own individual circumstances, experiences you might have been through where you've relied on financial services or other service providers, really important to understand it's not as simple as an illness that you may or may not have. This is much more nuanced than that. So being able to understand that is really key. I think lack of frontline consistency as well is a massive issue and can depend so much on whether someone's having a good day, bad day, when they last got their training, how new they are, who they're set next to. So I think enabling people to have a solution whereby the customer only has to tell the organisation their circumstances once, and then they are going to be getting a consistent level of treatment after that, is just incredibly valuable. And again, shouldn't be underestimated the potential commercial result that can allow you to deliver as well. And then GDPR as well is a particular sticking issue in this field. So yeah, it's not something that is particularly simple, albeit one of those things, if you begin to understand a little bit more, then it's slightly less intimidating. I've got a couple of questions I want to ask Andrew while the audience puts some together, if that's okay. An evolving landscape at the moment, Consumer Duty, second set of board reports coming soon, is slightly different in nature. What do you see as the expectations of the FCA evolving into in the next few years around vulnerabilities? Anything on the horizon that you think will significantly change, or do you just think it's an evolution of what we're seeing around Consumer Duty and somewhat the combination of the two subjects, if you like?
Yeah, so on the 11th of March, the FCA is reporting on their review of vulnerability, and the report came out in December, and on the Consumer Duty board reports. So I think they focused very much on data, vulnerability as well. I think a lot of people did a reasonable job on the fair value assessments. And in fairness, a lot of people under duty, the first thing they did was the fair value part, to a greater or lesser extent. So I think people sort of understood that it was tangible. They could do that, could look at it. They may or may not have made appropriate changes, but they understand that. One of the problems, I think, was because the vulnerability regs came out separately to the Consumer Duty regs, and within the vulnerability document, it referred a lot to training frontline staff, that people went off down that route and sort of appointed the vulnerability champion as sort of the head of the the call center, whatever. And then the Consumer Duty person was looking at sort of the reporting, and the two sort of weren't linked up, and that's led to a massive gulf. And only now a lot of firms are realizing that the Consumer Duty, the report's going, has actually got no data. We've got no data to show, and no chance of getting any data to show that those with mental health have a worse or better outcome as a resilient. And just saying, oh, no one's told us, is not good enough.
Sure.
I come back to the start of this, which is a lot of charities, self-help groups and things have gone off and they have got data, and they've got data. They've gone to the government and they've gone to the FCA and say, look, we have got data. We've spoken to X thousand people with mental health, and we can demonstrate that they get a worse outcome than those than the resilient. And the problem with that is that leads them going down a downward spiral, particularly when you have a combination of vulnerabilities. And maybe I should have mentioned, having a combination of things ends up typically sort of even worse. So if you have a financial and a health issue, or the two get intertwined, and that's where things get into trouble. If they end up down on benefits, then the government benefit bill increases, and we know that it's not the only reason, but the government quite clearly doesn't want its benefit bill to increase, and so it's coming to the industry and saying, come on industry, you get your act together, we know these big figures. And the FCA is saying, okay, everyone in the industry says it's not us, it's everyone else. So you have the data to show to us. So we have to have the data to demonstrate that those different cohorts of vulnerable customers, or types of customers, as I think the FCA recently referred to them, are getting no worse outcomes.
Sure. Excellent. Thank you, Andrew. So we will move on to questions in the chat. Got some really good ones coming through. I must admit, I hadn't expected the first question to be around my wallpaper. David, I'll come back to you privately on that. I'm sure no one else is particularly interested. So a question from a LinkedIn user. Andrew, you've mentioned a challenge I've often seen: data living in different systems, sometimes across different companies who may perhaps not be keen to share. What approaches have you seen to overcoming this? And can you share some learnings? Brackets, I wonder if there's a top-down approach through regulation that works, or if there are other paths.
Yeah, so I think you're absolutely right. And, the starting point is we're not sharing our data, and, without sort of scraping mud, people saying, well, they're our customers, we don't want to share that, they'll misuse that. I think it's a philosophy point. If you're saying they're your customer, then you're responsible for their vulnerability. So, you can't say, well, I want to keep that information, that customer, but someone else has got to keep the vulnerability information. That's just a private view I have. I think the reality is people aren't sharing data, and that's what the FCA is calling out. And I think the FCA is going to get stronger on it. And when people are saying, here's our consumer duty report, and it's got nothing, the fact that it's, particularly when all products are sold through an intermediated market, they've got nothing of feedback from anyone else. They're calling it out, and I think, yes, it is going to be pushback from the regulator. It's going to be 5 out of 10 go and do better. How they enforce that, I think, is the big question.
And indeed, there were a couple of board reports I saw where vulnerability wasn't mentioned, which is staggering, really. Another good question from Emma Stead here. How do we address the gaps that exist between the proportion of customers willing to disclose information, which would lead us to conclude that they are potentially vulnerable, versus the broad expected proportion in the portfolio, e.g. the 47% figure from the FCA Live survey?
Sure. So I think there's in our approach, which is we go out and ask customers, or we don't, but our companies do, either by sending out email surveys or by talking to them, and we get the vast majority of people giving us that information. So it does depend when you do that. You need to build it into your customer journey. Ideally, you want to do it at the point of sale. You want to do it, clearly at claims time. How often you need to renew that? I'd say annually, but that changes with different products, obviously. So building that into there and part of the customer engagement is the, not say difficult, but is the more bespoke part to each company from that point of view. And I have that conversation with lots and lots of companies, and it's how you start from that point of view, particularly if you have a very process and and system orientated way. How do you build that in? But what we find is the response is very good, and we do get great information. We do get information on addictions of alcohol and gambling and so forth. I'm sure we don't get 100%. What we don't know, and this is, so does that matter? What level of accuracy and precision do we need? So we need to go through the route of going, okay, we've looked at the outcomes, and if we look at the outcomes, we could show that actually those with gambling for our particular product, say an insurance product, actually, a lot of gamblers didn't tell us, but it didn't matter. There was no bad outcomes. Then we can say, okay, we don't need to press and get more information on gambling. If it does turn out that we're all the people who are gamblers are getting a really bad outcome, then we go, okay, in our assessment approach, we need to get more information on that. So how do we do that? And you know, if you look what we do in medical underwriting, you know, there's lots of techniques and things to get lots of information. So how far we need to go down that road is you know, is still in debate from that point of view. But we're getting, you know, typically, you know, high proportions of people responding. I think, you know, reading the, maybe I'm being a bit rude here, but my interpretation of the question is, you know, you're asking people to volunteer. People won't volunteer. You need to be proactive and ask them.
Thank you, Andrew. Yeah, I think I'd agree with that. And certainly something I've witnessed is when you are asking people, there's potentially a misconception that actually people won't want to talk about their vulnerabilities or won't be able to talk about them, where of course that does apply to a certain amount of those people, but actually most people who are in vulnerable circumstances are either in it in that moment and they need to talk about it, or they're well aware of it because they live with this circumstance day in, day out. So it's not something that they're particularly concerned about talking about. So I think trying to get past that misconception, which of course can be daunting to a relatively junior telephone agent, of course, but just ensuring that people understand it's not always going to be an awkward conversation necessarily. So another question has come in from Daniel Harrison. Very helpful, Andrew. Can you provide any indication of the net response rates you get from surveys to assist in identifying vulnerable customers? Obviously, you've touched on that a little bit, Andrew, and certainly in the customer experience work I've done, we see, speaking about vulnerability and consumer duty, actually garners better response rates than just asking people about their customer experience. But yeah, what's your thinking on how Morgan Ash do there?
Yeah, so it's far higher than most people think. And it obviously varies depending how you do it. So I have a mortgage advisor who sends the survey out with his terms and conditions and says, if you don't complete it, I'm not working with you. It doesn't say those words, but he has 100%. And actually, he's had no problem and no kickback. And I have to say that's probably the most draconian approach. It's not an approach we necessarily advocate, but actually is working absolutely fine. We have we're in financial advisors who have 100, 200 clients. Typically, I would say to them, just onboard people as you'll do your annual reviews. So onboard everyone over a year. There's one IFA I know who sent out, said, I'm going to crack on and do it now. They sent out surveys to all 100, well, I'll say 100 people, and he got 80% back sort of straight away or the next day. And then he spoke to about 10 people, and then the rest he said, I'll pick them up over the next year. So he sort of got to 90% very quickly. I've also, at the other end, we can send out sort of bulk emails, and we did have sent out bulk emails, and those have been a lot lower, particularly where they hadn't, they weren't engaged with the consumer and they hadn't spoken to them for years. So not surprisingly, the response rate was really bad. But if I look at my average, so I collect all the data and bung it together. I think the last report I did, it was 67%. But it massively depends on when you do it and how you build into that journey. I also think, don't worry about not being 100%, because we know there will be some people who don't want to, who give the information, but I think that's relatively small. There'll be certainly people who are just apathetic and just can't be bothered. Again, what we don't know is the people who don't engage on that, are they ones who are fit and healthy and it doesn't really matter, which is my suspicion, as opposed to those who want to tell you something. If you think, we're giving the opportunity for people who have got an issue and quite frankly are fed up of having to tell every single person they deal with what their issues are, then, at least we're picking those up. Then, think of that. And also, this is a journey. So if you're getting 60, 70, 80% start off with, brilliant, learn from that, understand that. You'll then, learn from those journeys. You can understand those journeys, get the feedback, and then work out what you need to do to improve on that.
Yeah. Excellent. Thank you, Andrew. So a note from Kevin Steele, who, as far as I can tell, has probably dropped off by now. So he said the FCA just promoted a webinar for the 11th of March around their vulnerability findings. I imagine that'll be around on the same day that they are hosting in London.
It's a live feed from their event in London.
Excellent. Good stuff. And one from a LinkedIn user: if they're your customer, you're responsible for their vulnerability. I think you've coined another new quote here, Andrew, that other people might be using. So thank you for that. A question from Michelle Harrison. This has been interesting. Thank you. It's great to see so much learning about how to identify and monitor data and report vulnerability, but a challenge for us is building a process for understanding when and how to remove a vulnerability. Really good point. Based on the transient nature of some people's vulnerabilities. Do you have any advice around how to capture this side of the data?
Yeah, no, sure. So, ultimately, I think you want to move to, viewing this as not as a one-off, but as a sort of real-time process. Now, it'll be quite real-time. We're nominally saying to people, do a view in a year's time. It depends what you're doing with them and depend on the potential harm. So we have companies that, doing short-term credit, for example, where you may need to get back in touch with them every few weeks. More likely on insurance, annual is probably going to be fine. The fact that they were bereaved maybe 1 year, did that make any difference? Well, you may say, okay, we're not going to promote we're not going to try and sell to them for the next 6 months or something like that. So it depends what you're going to do, how often you need to go back to them. Equally, I think the proportion, depending on the product, you'll need to go back to be relatively small. But think from a customer service point of view, of going back to them saying, hi, just want to check in, you're okay, had this, that seems to me as building that in. And it does depend on the product and what you're doing. And is that going to make any difference to you? But I think people will be doing more of it with regard to a customer service point of view.
Yeah.
My end game, and I'm talking a few years ahead here, is that if that person is then speaking to the general insurer, their life insurer, or their broker, and all sharing that information, that'll come in from other sources. And indeed, we go into a company called VRS, which is a vulnerability registration service, which coverage is very small, but we pick into that. And there are other data sources we'll ping into as well. So, for example, to get change of address and that sort of thing. So we can do that and bring those in real time. So you can flag those up as well.
Excellent, good stuff. Thank you, Andrew. So I thank you from Daniel in there as well for your response to his earlier question, but no other questions as far as I can see. Just one last one from me before we move on to close. Just a bit of tactical advice, I suppose. So if a firm wanted to start improving their approach today, what are the first 1, 2, or 3 things that they should consider doing?
Well, first thing is probably we can do a workshop with you to help you understand all these challenges, essentially taking you through what we've talked about today, which I think is a really good there. One of the challenges is it does cover multiple departments, so compliance, operations, customer service, so getting all those in a room and working through that is a big thing. Obviously, we have some tech. We do lots of trials with people. We'd love you to do that. It's pretty cheap to do, and to a certain extent, seeing is believing. So when we demonstrate that, and people go, "Blimey, I never thought about this, never thought the complexity," and we show the level of detail and granularity of data we're getting out of that. Not only the vulnerabilities we're identifying, the treatments or what we're recommending people to do. And then comparing that and benchmarking it between different departments and those sort of things, that's just really blows people's mind, quite frankly.
Excellent. Okay, thank you, Andrew. So that brings us to the end of today's session. A huge thank you, firstly, to Andrew for his insights, and to all of you joining us today. I hope you found the discussion useful. Thank you for your contributions as well and your questions. Before we go, I'd like to quickly plug our next webinar in March, where we'll be covering consumer duty implementation and outcome monitoring strategies. Looking at practical tips for meeting requirements, compliance best practices, and real-world examples from firms in how they are tackling these issues. If you'd like to discuss Morgan Ash's offerings in more detail, please feel free to contact Andrew. He's relatively prolific on LinkedIn, so you'll be able to find him there or through the information shared earlier. Also, I highly encourage you to join the Protect Association LinkedIn group, completely free and a great way to stay updated with future webinars and industry discussions that we're having. We also have an in-person event planned for the 27th of March in London to celebrate 25 years of Protect. Limited spaces available, so let me know if you're interested in attending and we'll see what we can do. You can also find out more about becoming a full-time member of Protect on our website or by contacting me. So thanks again for joining us today, and we'll see you at the next session. Goodbye.
Cheers all. Thanks, James.